Do you also believe that wealth comes from luck? If so, today's video is a wake-up call for you. Wealth is not an accident clearly states that wealth isn't an accident, but a designed outcome. It involves specific patterns, habits, and ways of thinking that every successful person adopts. In this video, we'll learn what wealthy people think about money, what principles they live by, and how you can apply the same formula to build wealth. So, if you're ready to embark on the path to financial freedom, be sure to watch this video until the very end. Let's get started. Chapter 1. If your bank account is at zero today, believe me, it's not your fault. But if it's still the same 10 years from now, then no one else will be to blame. Most of us believe that wealth goes to the lucky ones, that being rich is a coincidence, like winning the lottery or inheriting something. But this very thinking holds us back. The truth is, wealth is a process, a system, a design. And if you understand that design, you can lay the foundation for prosperity for yourself. Always remember, money doesn't come from hard work, it comes from smart work. And this is the core message of this book. Building wealth is a scientific and systematic endeavor, not a game of chance. Those who understand this can lose money and still make it back. Money should be working for you, and that's only possible when you know that money comes from thought, and thought can be learned. In this chapter, we'll talk about the mindset that's the first step on the path to wealth. In India, most people still think that money is evil, or that earning a lot of money is greedy. But when you believe this, you unknowingly create a distance from wealth. Think about it. If you consider something bad, would you let it into your life? No. So the first step is to change your thinking. Money is a tool, just like a knife can cut bread or injure someone. The fault isn't with the money, it's with how it's used. Now, the question is, what's the right mindset? The right mindset is one that sees earning money as a solution, not a problem, one that understands that money is a tool with which you can build a better life, a better society, and a better future. The second big factor, financial education. A very tall man Jashil, who lived in the town of Hampi, a very tall man Asek town of Hampi, were not taught how to increase income, how to convert savings into investments, or how to manage taxes. This is why millions of people work hard their entire lives, but can't escape financial stress because they haven't understood the system. Every chapter in this book will peel back a layer of that system for you. And it starts with the question, do you work to earn money, or does money work for you? Understanding this difference is crucial. Those who become wealthy have freed themselves from the cycle of trading time for money. They've learned to build assets that provide them income even while they sleep. This wealth can be real estate, the stock market, digital property, or an automated business. If you've considered yourself middle class or struggling until now, it's time to change that label. Every chapter in this book will give you a new perspective and a new tool to get yourself into a financial position where working is an option, not a necessity. Where you are now isn't your final destination, but the direction you take going forward depends on your way of thinking. Wealth isn't an accident. It's the result of a mindset and strategy, and we'll explore this in more depth in the next section. Now just imagine, if you had a roadmap that was absolutely clear, easy, and could be implemented today, would you want to follow it? The next section is the beginning of that roadmap. We'll talk about the practical ways you can not only attract money, but also retain it and grow it. These are formulas that aren't taught in school or college, but wealthy families teach their children exactly this. The first of these is understanding how money comes. Money doesn't come from a single person. It comes from a system. When you provide a solution to a problem, when you make someone's life easier, people are willing to pay you. That means money always comes from value exchange. So now the question is, how much value do you provide? Most people work hard all day, but if you're just following orders and not providing any special thought or solution, your income is limited. But as soon as you start thinking about how you can make someone's life easier, you become a value creator. And that's the first step to the true art of earning money. Now comes the second step. Where to put money once you have it? Investing for wealth? Wealthy people don't become rich by saving money, but by circulating it. They understand that every stagnant dollar is a missed opportunity. But circulation doesn't mean spending. It means investing in the right direction. That's why it's essential that you're not afraid of money, but use it wisely. By now, you've learned that mindset, value, and investment are the foundations of wealth. But there's a fourth thing that ties these three together, and that's Chapter 2, Part 1. Clarity and problem solving. Every time someone says I don't have enough money, what they're really saying is, I lack clarity. Money goes where there is clarity. Clear goals, a clear plan, and clear thinking, these three combined are productive, not confused. They're running, but without direction. That's why the second rule of wealth is clarity. The clearer your thinking, the more systematically money will flow towards you. Now let's talk about a very important mental shift. You're not trying to earn money, you're trying to provide solutions. When you bring real change into someone's life, you get paid. And if you do it on a large scale, you can earn a lot. So the first step is to ask yourself, what problem am I solving? If you're in sales, you're not just selling a product. You're solving that person's fears, desires, and needs. If you're a teacher, you're not just teaching a subject. You're helping to build a career. This difference in thinking changes the game. Here's an important point. Your income is always tied to your clarity and your ability to provide solutions, not your degree. How many people have degrees but lack direction? And on the other hand, there are people with limited formal education who are earning millions based on practical understanding and insights. Why? Because they understood that money comes not from education but from value, and value is inherent in solving problems. So you should focus your energy on what problems you can solve better than others, and who are the people struggling with these problems. Here's another big difference in the thinking of the poor and the rich. A poor person thinks, what do I need? While a rich person thinks, what do others need? This difference determines their direction and results. Now let's move to the practical side. To gain clarity, if you want to earn, say, $100,000, you also need to know what kind of service or product can generate that income. How many people do you need to sell it to? And at what price? Knowing all this is part of clarity. And as soon as that's clear, money starts to be attracted. But for this, you need to stop, think, and ask questions of your mind. Wealth goes to those who know how to think, not just those who work hard. Consistency and tracking. Now let's talk about consistency. Many people start, but don't stick with it. And that's why money doesn't stick either. You need to develop a habit of taking small, consistent steps every day. Otherwise, you'll get tired and fall back into the same rut you started from. Here's an important rule. What you track grows. That means if you don't track your income, expenses, investments, and goals, you'll never be able to improve them. Rich people track everything. Their diaries, their dashboards, their financial reports, everything is organized. You also need to develop the habit of reviewing your finances every week. See where money came from, where it went, what you learned, what needs to change. This small habit can completely change your financial direction. Now, the question is all this difficult to learn? The answer is, absolutely not. But it requires you to discipline yourself. You need information, practice, and focus. Behind every successful person is a system, and behind every wealthy person is a mindset. If you adopt both, nothing in the world can stop you. And this is the core of this chapter, that you think not about earning money, but about providing solutions. You live in clarity, not confusion, and you achieve goals through a system, not by chance. Chapter 2, Part 2. What to do with your money. Money has come to you, so the question is, what now? Do you keep it in a cash box, let it sit in a bank account, or invest it somewhere? In India, most people still only think about saving money. Saving is important, but saving alone doesn't create wealth. Until money works for you, it can't bring you freedom. Wealthy people know that money isn't meant to sit stagnant. It's meant to be in circulation. The first step is understanding investment. There are many options in the market, but the most important thing is choosing correctly. Investing without knowledge and research is like embarking on a long journey without a map. Therefore, if you're going to put your money to work, you must first learn which platform is right for investing. What are the risks? What could the returns be? In India, there are now many financial advisors, apps, and platforms that guide beginner investors. You just need to start and keep learning as you go. Secondly, investing is never a one-time thing. It's a regular process. Just as you save money every month, invest some every month. This starts the compounding of your money, and small investments grow very large over time. Third, the most important rule: never invest solely for the lure of profit. Markets fluctuate. The person who only chases profit quickly gets caught in losses. A successful investor is someone who is patient, understands market movements, and acts strategically. Many Indians still think gold is the safest investment. True, gold should be part of a financial portfolio, but relying solely on gold isn't the right strategy. You need to learn the art of building a balanced portfolio with various types of investments to reduce risk and improve returns. Financial discipline. Now let's talk about financial discipline. Managing the money you earn is even more important than earning it. Wealthy people are very strict about this. They create budgets, track expenses, and avoid unnecessary spending. In India, people often say, it's difficult to earn money, so we have to spend it. This thinking is wrong. Earning money and managing it are both essential. If you don't put your money in the right direction, your hard work goes to waste. Therefore, it's good to prioritize your expenses. First, cover essential expenses like food, electricity, water, and health. Then set aside money for savings and investments, and finally, spend on entertainment or other expenses. This budget should be yearly, monthly, and weekly, so you can review it periodically to see where improvements are needed. And the biggest rule: never let your expenses exceed your income. Many people in India get caught in the trap of credit cards and loans. If you earn $50,000 a month, should you spend $60,000? No. You should save a portion of that $50,000, say $10,000, and invest it. It's very important to understand that money isn't just about earning, it's also about control. And this control is the key to your freedom. Moving forward, preserving money is just as important as making it. Wealthy people adopt various strategies to protect their money: tax planning, insurance, retirement planning, and building an emergency fund. In India, many people get scared when they hear about taxes. But proper tax planning, insurance for illness, accidents, and unexpected expenses are essential. Wealthy people don't take these things lightly. The earlier you start retirement planning, the better. Without a pension in India, big financial difficulties can arise. So even after earning money, learning to manage it correctly is very important. Today's era is changing rapidly. In India, new businesses, digital marketing, online trading, crypto, the learning process never ends. Those who learn today will be ahead tomorrow. In this entire chapter, we've seen that it's not just about earning money, it's also about putting it in the right direction, spending it, and saving it. All of this together creates your path to financial freedom. Chapter 3, Part 1. Mindset and Habits. Do you know that your thoughts and habits are the biggest determinants of your financial success? The way you earn money is fundamentally based on your mindset. The biggest difference between an average person and a wealthy person lies in their thoughts. When we talk about money, people often think it's just about earning. But in reality, making money is just the beginning. Maintaining and growing it is an even greater skill. And this skill comes from your habits and thinking. First, you need to focus on your daily habits. Wealthy people prioritize financial planning, saving, investing, and self-education in their daily routines. They know that small daily habits lead to big results. Now, the question is, what are your habits like? Do you save a portion of your income every month? Or do you spend whatever you earn? Are you positive about money, or do you think negatively? An interesting fact is that wealthy people see money as a resource, while poor people see it as a limitation or a problem. This thinking affects your decisions. When you think, I don't have enough money, the number of options in your mind that can help you make money decreases. Conversely, if you think, I have less money, but I can find ways to increase it, new paths open up in your mind. This change is called a mindset shift, which takes your thinking to a new level. This is not magic, it's a scientific process. You can achieve it by changing your habits and thinking. Risk-taking and continuous learning. Another important thing for moving towards wealth is the ability to take risks. Many people in India are afraid of risk. They think losing money is a failure. But the truth is, you can't earn big profits without taking risks. Those who take risks intelligently often make the most money in the long run. Risk doesn't mean playing the lottery. It means taking calculated steps with planning. For this, it's important to understand your risk profile. That is, how much risk you can handle, considering your age, family situation, and income. When you take risks intelligently, you learn new things, adopt new business models, and grow your money better. But remember, there's a big difference between risk and greed. Greed means investing blindly, while risk involves strategy and planning. The third important thing in mindset is continuous learning. Wealthy people are never satisfied with their knowledge. They are always looking for new information, new methods, and new experiences. In India, the importance of education has always been there, but the lack of financial education holds us back. So never consider your education complete. Stay informed about investments, markets, taxes, new business ideas. In today's digital age, accessing knowledge is easy. You can read books, take online courses, attend webinars, or learn from experienced people. The more open and updated your thinking is, the greater your earning and investment possibilities will be. Financial goals and skill development. Now let's talk about financial goals. No journey is complete without a destination. Wealthy people always set clear and specific goals. They don't just think, I just want money. Instead, they think, I want to build this much wealth in 5 years. Or, I want this much income every month. The clearer your goal, the stronger your plan will be. Setting goals helps you control your expenses, savings, and investments. At the same time, goals also motivate you. When you know what you're working for, you don't shy away from hard work and dedication. Your wisdom and experience are hidden within you, but we often keep searching for new things in the outside world, while not fully utilizing the resources we already have. It's important to understand that money comes only when you can solve other people's problems. And to solve problems, you need to hone your expertise or skill. In a country like India, where competition is high and opportunities are limited, you need to make your skills so essential that people can't do without you. But how is this possible? First, ask yourself, what's special about you? What's your strength that others recognize? Often, we underestimate our strengths or think they're ordinary, but every person has some unique quality. You just need to identify and develop it. Now let's talk about skill development. No job or skill remains beneficial unless you stay updated. Just as technology changes, so do market needs. Therefore, continuously learning, adopting new methods, and improving your work is essential. Online courses, webinars, books, or even mentorship from experienced people are very useful for this. The next big step is packaging your skill, meaning, how do you effectively present what you know to others? For example, if you're a digital marketer, present the results of your work with data and case studies. People trust someone who presents their work well. So, learning the art of selling your skills is important. After that, understand the importance of networking. Your connections increase your opportunities. So, continuously strengthen your network through social media, professional events, and acquaintances. In India, we often limit networking to just making acquaintances. But true networking means creating value for people and benefiting them too. When you help others, they also start helping you. That's the power of networking. So, in this chapter, we learned that to increase your income, it's essential to recognize your strengths, improve them, present them effectively, and connect with the right people. Chapter 4, Part 2. Investing for sustained wealth. When it comes to building wealth, simply earning isn't enough. The real game begins when you start investing your earned money in the right direction. In a country like India, where there's uncertainty at every turn, a smart investment strategy forms the foundation of your financial security. Here, we'll understand why investing is crucial and how intelligent investing can transform your financial future. First and foremost, let's be clear. Investment is the most important tool in the art of attracting money. You can earn as much money as you think you can. But investing gives you the opportunity to make money work for you. The truly wealthy are those who put their money in places where it grows, even while they sleep. This is called making money from money. Would you like to explore any of these concepts further, like specific investment strategies or developing a wealthy mindset? A big expense is coming up. When your goals are clear, you'll be able to make better decisions about which investment option is right for you. The second step is understanding the different investment options. In India, there are many avenues for investment like mutual funds, stocks, real estate, gold, fixed deposits, bonds, and now digital assets like cryptocurrency. Each option has its pros and cons. Mutual funds and stocks have more volatility, but they offer better returns in the long run. Fixed deposits, on the other hand, are safe but offer lower returns. You need to find the right mix according to your risk tolerance, time horizon, and financial goals. The third crucial point is consistency in investing. Many people in India prefer to invest large sums, but that's not necessary. Small regular investments, like an SIP, systematic investment plan in mutual funds, can accumulate a lot of wealth over the long term. The beauty of a systematic investment plan is that it's less affected by market fluctuations because you invest regularly. The next aspect is patience when investing. Money takes time to grow. Sometimes the market drops, and it's scary, but smart investors stay patient. Long-term investing is more profitable. In India, people generally want quick gains, so they make wrong decisions chasing short-term profits, which leads to losses. Here's something to keep in mind. The process of building wealth is not about putting all your eggs in one basket, but rather investing in different sectors and instruments. If you lose money in one place, gains from another can cover it. This is your financial safety net. Many investors in India put everything into one stock or real estate, which increases risk. So let's understand how having investment knowledge and understanding the market's mood can be beneficial. India is rapidly digitizing. You can invest and research on many online platforms, but evaluate fake news and rumors and adjust as needed. The next important topic is tax planning. In India, taxation significantly impacts your investment returns. Smartly adopting tax-saving methods can make your investments more profitable. You can start with just a few thousand rupees per month. So if you think you can't invest because you have less money, you need to change that mindset. Financial literacy is also growing rapidly in India, and many people are improving their financial situation by investing small amounts. Every investment has its pros and cons, and the right option depends on your needs and circumstances. Therefore, good information and advice are key to investment success. Finally, let's talk about mindset. When investing, fear, greed, and haste are your enemies. Often, people get scared during a market downturn and sell, or they get greedy during a boom and overinvest. Successful investors are those who rise above emotions and make logical, strategic decisions. The culture of investing in India is also evolving. When you invest with the right mindset, the right information, and the right strategy, the path to wealth growth opens up. In this chapter, we understood how to invest money, why investing is important, and how we can invest smartly. Chapter 5, Part 1. Did you know that earning isn't as important as managing your money correctly to build wealth? In essence, the secret to your financial success lies in the art of controlling your money. Many people think that the more money they earn. In a world where the balance between spending and saving often gets disrupted, understanding money management has become an essential part of life. First, let's understand why money management is important. No matter how much you earn, if you can't manage it correctly, wealth doesn't stick around. Sometimes, even with a large income, people get caught in debt. The reasons for this are poor budgeting, unplanned expenses, and emotional spending. So, good management means balancing your expenses and savings. In India, it's often seen that families have unnecessary expenses, like expensive gifts, wasteful spending, or spending for show. But successful people prioritize their expenses. They know which expenses are essential and which are just wasteful. Now the question is, how do you budget? The easiest way is to account for your income and divide it into different parts. For example, 50% for essential expenses, 30% for investment and savings, and 20% for comfort or entertainment. This scale can vary based on your needs and priorities, but the main point is to have a record of every month's earnings. Additionally, many people in India do cash transactions, which makes it difficult to track expenses. Digitizing helps. Chapter 6, Part 1. Have you ever wondered how much your thoughts and habits play a role in your financial decisions? Money isn't just numbers or notes. It's also a mental game. People who are financially successful don't just adopt the right strategies. Their way of thinking is also different. This is what we call a money mindset. In India, where family, society, and culture have deep roots, our feelings and beliefs about money are deeply intertwined. Sometimes, we unknowingly adopt mindsets that hinder our financial growth, such as thinking that worrying about money is pointless, or that rich people are just lucky. This thinking prevents us from being proactive. Changing your money mindset isn't easy, but it's not impossible either. The first step is to observe your current thoughts. Think about it. When you think about money, what thoughts come to mind? Are you afraid that money will run out? Do you believe that you have to constantly struggle to earn money? Or do you think that earning money is wrong? The answers to these questions will help you understand your financial habits and decisions. The second step is to identify negative thoughts and change them. Suppose you feel, "I'll never be rich." Change it to, "I'm learning and getting better every day." These kinds of positive thoughts will slowly bring about changes in your behavior too. The third step is to clarify your goals. In India, people often start earning money without big life goals, which reduces direction and motivation. When you have clear financial goals, you'll be able to make better decisions. The fourth step is to educate yourself. Reading about money, attending financial seminars, or seeking advice from experts will broaden your thinking. And most importantly, practice. To change your mindset, you'll need to adopt new habits, such as budgeting, tracking expenses, and planning investments. Many people in India hear financial success stories, but they don't change their behavior. Remember, success comes not just from planning, but from implementing it. In this chapter, we'll understand how to develop a money mindset and how it affects every aspect of your life. Chapter 6, Part 2. When we talk about a money mindset, it's important to understand that it's not just a change in thought, but a complete reconstruction of a mental model. The habits, beliefs, and emotions we have about money in our minds often form from childhood, family, and society. So changing them isn't easy, but it's not impossible either. The first important step is to identify your limiting beliefs. For example, you might think money brings success. The seventh step is networking and connections. For financial success, it's crucial to connect with the right people. In India, relationships are very important. Strengthen your network. Many Indian people view failure negatively, which hinders progress. But failure is a means of learning and improving. When you view failure as an opportunity to learn, your risk-taking ability will increase, and you'll be able to explore new opportunities. The ninth step is patience and persistence. In a country like India, where resources can be scarce, it's wrong to expect immediate riches. The journey of wealth creation is long, and it requires patience, dedication, and continuous improvement. It's important to understand that small savings and regular investments can yield big results over time. The final and 10th step is to measure your progress and adjust. Your financial goals and mindset can change over time. Therefore, regularly review your progress and modify your plan as needed. But if you want financial freedom, smart spending is the most crucial step. The second habit is investing consistently, which is called dollar cost averaging. Many people see investing as a one-time big decision, like putting a large sum into stocks or mutual funds all at once. But given market fluctuations, this can be risky. Wealthy people understand that making regular, smaller investments can reduce the impact of market instability. This is called dollar cost averaging. In India, SIPs, or systematic investment plans, work on this very principle. By investing a fixed amount every month, you can get good returns over the long term. The third habit is networking and knowledge acquisition. It's tough to go it alone in the world of earning and growing wealth. Rich people constantly gather new information, attend seminars and webinars, read books, and learn from experienced individuals. In India, where the digital age is rapidly expanding, adopting this habit is even more essential. By following free online courses, podcasts, YouTube channels, and reliable financial advice on social media, you can keep your information updated. The fourth habit is creating multiple income sources. Wealthy people don't just earn from one source, they make money from several avenues. They know that if one income stream dries up, money will still come from another place. In India, people often rely solely on a job or one business, which increases risk. So you should also think about what additional income options you might have, such as freelancing, real estate, online businesses, the stock market, or a part-time job. The fifth habit is tracking expenses. This is perhaps the simplest yet most overlooked habit. Wealthy people note every expense. This not only helps with budgeting but also helps you understand where your money is going. In India, we often spend with cash and don't keep track. By properly using digital payments and bank statements, you can easily track your expenses. Rushing into any investment or financial plan can be detrimental. Wealthy people know that money grows only with correct decisions and patience. In India, when the market falls or an economic crisis hits, people often panic and sell their investments, which increases losses. It's important to think long-term, stick to your plan, and not get bothered by fluctuations. The seventh habit is maintaining discipline. This habit strengthens all the others. Without discipline, no matter how much income you have, it won't go in the right direction. Wealthy people focus on their financial goals every day, every month. They follow rules for saving, investing, spending, and debt. In India, family and social pressure can sometimes break this discipline. But remember that your financial independence lies in your self-discipline. The eighth habit is continuously educating yourself. As the world changes, financial rules and opportunities also change. Wealthy people equip themselves with new information. In India, this habit becomes even more important because the sentence fragment here in the original Hindi makes it difficult to complete the thought naturally in English, but it implies that being up to date will give an edge. This habit will make you distinct and strong compared to others. The 10th habit is maintaining a positive mindset towards wealth. Often, negative thoughts and fear about money affect our decisions. Wealthy people see money as positive energy. It's a source of opportunity, freedom, and security. By adopting this mindset in India, you can completely transform your financial situation. In this section, we learn that the success of the wealthy isn't just in their earnings, but in their daily behavior, habits, and mindset. By adopting these habits in the Indian context, you can also make your financial journey successful. Chapter 8, Part 1. Did you know that the biggest wealth creator is your state of mind? Yes. The way you think determines how you view money, how you attract it, and how you grow it. Today, we're going to talk about the deeper meaning of wealth and the mindset that takes wealthy people to their financial heights. This chapter will take your thinking to a level where you can completely change your relationship with money. First, understand that money is not just a piece of paper or a digital number. Money is energy, a power of exchange that you receive in return for the value you provide. When you understand it from this perspective, only then can you attract wealth into your life. For example, the idea that you have to work very hard for money, or that money corrupts, or that you'll never be rich. These thoughts pull you away from financial freedom. So the first step is to challenge these negative thoughts. How? Every time a negative thought comes to your mind, stop it and think. Is this true? Do I already have examples that prove it wrong? Just like there are many successful people who have overcome their circumstances and found a way to become rich. The second important principle is the practice of gratitude. When you are grateful for what you have, your energy becomes positive. This positive energy attracts people and opportunities around you. In India, where there's often a greater sense of lack and struggle, a feeling of gratitude will make you mentally strong and help you attract money. The third point is setting clear goals. Money is only attracted when your goals are clear. I want to be rich is an unclear goal. But I want to earn 1 crore rupees in the next 5 years is a clear goal. I want to build 50 lakh rupees in assets is a clear goal. Clear goals mentally focus you, show you the way, and concentrate your energy. The fourth and most important is action. Thinking and planning are essential, but nothing is possible without implementation. Wealthy people make decisions quickly and take action. In India, we often make plans, but the sentence fragment here in the original Hindi makes it difficult to complete the thought naturally in English, but it implies that plans often don't get executed. Immediate and continuous action is necessary for success. Now let's talk about the laws of attracting wealth. Laws of attracting wealth. 1. The law of value exchange. Money always comes when you provide value to others. Value can be a physical item or your services, knowledge, time, or solutions. If you understand people's problems and solve them, money will automatically come to you. 2. The law of focus. When attention is scattered in many places, the result is weak. Wealthy people concentrate their efforts on fewer areas so they can work deeply there. In India, we sometimes try to do everything, which results in nothing being completed. 3. The law of collaboration and networking. Wealth is not built alone but by working with others. Wealthy people value collaboration.